She now has her own pool of money that she's able to borrow from for something that I did for the past 15 years. And I'm done. You need the compound interest to be working for you. So that's why when you do it for your children, they got time. Before they need to use it, it may be 18 years.
Right.
So that 18 years of compound interest is what got them ahead. This is why the other cultures, like I'm going to tell you, it's a guy who was teaching me about real estate investing.
Welcome to the Millionaire Essentials podcast, where we give you all the essentials to be a millionaire. I'm your host, Brandon the Provider. And
Yes.
You know I got my partner in crime with me.
Yes, sir. Yes, sir. You know Tevin Facey here, the Fun and Poppy. What's going on, y'all?
What's going on, y'all? Listen, we got some money talk, some wealth talk today. We have a special guest, Lindsay Smith here. What's going on, Lindsay?
What's going on? Thank you for having me.
Of course.
Took you a little while to get out here, though. I'll tell you that much.
I mean, the traffic coming from New York to Jersey was no joke today.
You know when you from big NY, it take a little time, man. You know what's going on.
Just a little bit.
I think we from New York. You got to be fashionably late. Ain't no question about that.
I'm sorry about that.
Nah, that's cool.
But
It's
the
cool.
fashionably make it sound cute, though.
Listen. What you're known for out in the public is talking a lot of big insurance talk. So can you break down who is Lindsay Smith and how did you get into insurance?
Wow. Okay. So I am a licensed life insurance broker for 14 years. The funny thing is people don't know that I got into this space because I was in the entertainment space before doing marketing, working with clothing brands, and I did celebrity placement. And when the recession happened, all the companies were like, let me cut off my marketing budget.
Right.
You know, that's usually what a company does. They cut their marketing budget off, but they still want the same sales.
Of
Isn't that
course.
funny? That's what they want.
Yeah.
So I was like, you know what? I want to get involved with something that's recession-proof.
Okay.
And I went to Howard and I got a degree in business, right? So I said I wanted to do something involved with finance. So when they reached out to me about being in life insurance, nobody ever thinks about being in life insurance. That's not like a job that people aspire to be.
Right, of course.
Unless your family is in life insurance.
Right, of course.
So I was like, wait, it seems pretty cool. They're going to teach me about money. They're going to teach me about strategy. I was like, I'm going to try it out. But what really made me want to get into the business was they said, there's no limit to how much money you can make. And I've always worked in scenarios where I was the one who decided how much I made, depending on what I did. So in this situation, that was going to be the case. And I was like, oh, so it's no limit. You could just, whatever I do is going to determine. So that's what made me really get into it. And then I started to love it. And here we are 14 years later.
Wow.
And so in addition to that, what I realized was missing was in the industry, they don't really mentor us on how to do business. Unless like your family is in it and they're bringing you in.
Right.
Or the companies are like, I want you to sell, but they're not really teaching you what to do. So I have my own mentor in the business, this guy, Eric Nation, still my mentor, who really taught me the ropes. And
Shout out to Eric. Shout out to Eric.
He's dope, out of Alabama. And so I said I wanted to do the same thing. So I started a mentorship program as well where I mentor agents to make at least 6 figures in the business. And then I wrote a book, Creating Wealth Through Life Insurance, because I felt that people thought life insurance went over their head.
Right.
And they didn't want life insurance because they didn't understand it. They thought it was a scam. So I wrote a book to kind of simplify what life insurance is about, an easy way for you to understand it for a 10th grader.
Right.
Can understand what to do. And that's how I came into the different spaces of it.
That's amazing. Yeah. And you know, obviously a lot of people nowadays, especially due to COVID, they're starting to look more at life insurance, not only just for the part of the death, right, but also the life, right, that they can start to use it to invest, right? You know, we're in a financial literacy era right now.
Yeah.
So people, you know, obviously people are loving the life insurance space for themselves. But, you know, something that I always see that you promote just yourself on the, you know, on Instagram and everything like that is that you're a legacy creator, right? Absolutely. So explain what it is to be a legacy creator for some of the people that don't know. They've seen you. They say, hey, she's gorgeous, but I don't know what she's talking about in being a legacy creator.
So really, I came up with legacy creator because I felt that it takes one person in your family to make that change.
Correct.
To really pass on for generations. And so I said in my family, although my mother did a great job, she set me up. She taught me about credit. She taught me about life
wow, that's
insurance.
amazing.
She set me up with property. So she did a lot more than a lot of people's parents had done for them. Right. But I said I wanted to do it on another level. My mother did it through the way of having 62 degrees. She got her doctorate, this, that, and the third. She did it that way. I said,
hold up, did you say 62? Am I the only one that heard that?
I'm exaggerating, but she does have about 7 degrees.
I was about to say.
I ain't gonna lie. I was thinking 62.
62. What school she went to?
Exaggeration, but no, she has I think like 5 masters, bachelors, doctorate.
Might as well be 62.
Yeah,
right.
It's
Yeah,
a
you're
lot.
right.
She got a lot, right? So, really.
Shout out to moms.
Shout out to mom for all of those degrees.
Right.
So I took a different path. I decided to be an entrepreneur. I do have my bachelor's degree, but I didn't go on to get a master's and all of that. And nothing's wrong with it, but I just chose a different road.
Right.
And so I said that I wanted to be able to show people how they can create a legacy for their family, not just for the generation after you. So not just my daughter. I want to be able to teach so that you know that it's your daughter, it's your grandkids, it's your great-grandkids are able to also provide for the family and keep it going. So that's really what Legacy Creator was all about. And being in life insurance, what people don't realize is when you purchase insurance for your kids, you're already naturally setting up for the next generation. Because if you purchase for your kids, you're actually setting up the insurance for them to have something while they're alive, but your grandkids to be able to reap the death benefit.
Right.
So you're already taking care of 2 generations with that policy, which is another reason why I felt life insurance was connected to being a legacy creator.
So break that down, right? Because you put a post on social media, right, that be going crazy when we talking about kids. You put up something that you have purchased a life insurance policy when your daughter was 2. And at 17, she had max funded it. And she was able to reap benefits for the rest of her life.
Absolutely.
Can you break that down as best you can, simplify it for the people? What does that mean?
For the 10th graders out there, shout out.
What does that mean?
So basically what I did was when my daughter was 2, I brought a whole life policy that you only have to pay for 15 years. And what that means is you're going to pay a premium for 15 years, but the policy is there for the rest of her life.
Okay.
So for 15 years, I paid a premium, and my daughter turned 17 in December. Shout out to her.
Shout out to her.
So I no longer have to pay that premium because we're 15 years in. But for the rest of her life, every single year she receives a dividend. The cash value is growing. The death benefit is growing every single year. So she has a living benefit to be able to borrow from, to use it for whatever she wants. If she wants to use it for college, if she wants to use it for purchasing a property, if she wants to use it to start a business, she now has her own pool of money that she's able to borrow from for something that I did for the past 15 years. And I'm done.
That's amazing.
So it really breeded more than $1 million by the time she gets like into her 60s. But it's the compound interest.
Yeah, and I think something that you said that was very important, right? You said that she can borrow against it, right? So obviously, you know, Millionaire Essentials, we talk about nothing but business funding and credit and how you can leverage your credit. But we always talk about something that it's not just leveraging your credit. We're just talking about leverage majority of the time, right? Leverage your relationships, leverage your partners, but you can, in a sense, leverage your life insurance policy.
Absolutely.
And now you don't have to actually have that credit, right? Because, hey, you know, maybe some things you stumbled along the way. You just got to get back on your feet. But you at least would say that, hey, my parents was smart enough and, you know, they took out this policy for me when I was 2. And now I'm, let's say 22, I'm ready to start a business. I can borrow against money that I already have sitting that's been compounding. I think that that's just amazing that, you know, people to learn from you as they, you know, scrolling down your Instagram page. Post going viral.
Well, really the thing about it, and what I would love people to do is understand how much time and compound interest, how amazing that is.
Right.
When you have time and you're compounding something, it's going to do really, really well. And so the problem with our people today is everybody wants instant gratification.
Yes.
So they want
that's social media, though. I think.
That's social media. And so I get people all the time who call me and like, well, I want to borrow $1 million from the policy. I want to get it today. I want to borrow it next year. I'm like, well, are you putting $2 million in? I mean, I don't understand. It's not just the money is made because it had compound interest. Of course, you can put big amounts of money and then have big amounts of money, but that means you had the money to put in to take out. But if you want it to be money that you didn't put in, you need the compound interest to be working for you. So that's why when you do it for your children, they got time. Before they need to use it, it may be 18 years.
Right.
So that 18 years of compound interest is what got them ahead. This is why the other cultures, like I'm going to tell you, it's a guy who was teaching me about real estate investing. Shout outs to him. A lot of shout outs this episode. Jewish fella. He taught me a lot about investing. He's who helped me to get my first 2 properties.
Outside of the ones that your mom's left for you.
Right. My mom's ones, those are more personal. These were investment properties, right? And so he basically, what he was doing is every time a child was born in his family, he was purchasing $1 million policy on them. Guess what? He's the owner. So he actually owns the cash value in the policy. So he's investing in all these properties. Right. He's making money with the money that he has on these kids. He puts it back before they're ready to use it.
Right.
But he's essentially building this cash value for these kids. So now when the kids are grown and they're ready to purchase a property, they're loaning from themselves. Because he's built them a nice amount of money. And he's been able to leverage it himself whenever he needed to. Wow. So this is a thing that people are not taking advantage of. But this is just a normal practice for him.
Right.
Anytime his kids is having a baby, his kids already had insurance. He's like, Lindsay, can I get more? And he's in his 60s now. So there are limits to how much insurance you can get based on your net worth. So you can't just keep buying it if your net worth is not matching up with it. But so this is what he started doing because he's like, well, they don't want to get me anymore. Right. So let me buy some on other people.
Yeah. That's amazing. So he's becoming, he essentially became their own bank and he made them become their own bank.
So what I'm hearing is how your parents set up a good foundation for you to become rich. You're setting up a foundation for your daughter to become wealthy. Because that's kind of 2 different things with life insurance. So we're going to get into some real life insurance talk. We're going to get spicy, right?
We're going to get spicy. This is spicy. This is a spicy segment right here. Spicy segment.
Of course, you got to start with the foundation, right? So let's start here, right? Because we're saying a lot of big words.
Yes.
Can you break down what is whole life? What is term life? What is an IUL? And this compound interest you're talking about?
All right. So let's just make it simple.
Yes. So 10th graders, listen up.
So term is going to be an insurance that's temporary. Okay. That means it's only going to last for a period of time. 10 years, 20 years, 30 years. It's typically going to be for people who are looking to cover a mortgage, replace income for children, cover debt, taxes, those type of things. It is not for your entire life. It builds no cash value. It is not in the benefit of you. It is for your beneficiaries. So if you are an individual looking to cover any of these things and you want to leave it to your beneficiaries, this is the type. But it is also the most affordable options. Right. Let's talk an option. $1 million term policy, 30-year, for a 30-year-old is about $30 a month. Wow. So very affordable.
30 is right there.
So that's for average individual. Right. That's not somebody who has health concerns or things like that, but not a smoker, but somebody who is in good health. It would be $30 for $1 million at the age of 30. Okay. So that gives you an idea. Okay. Now, whole life. Whole life is a permanent policy. It builds cash value. The premium is level, meaning whatever you're paying, it's level. When you start the contract, if they tell you it's $100, it's $100 always. It doesn't go up even if the insurance company's cost goes up. It has nothing to do with you. Okay. Also, it lasts your entire life. It is a guaranteed death benefit, and it will have dividends if the company is paying dividends, usually if it's a mutual company. All right? Okay. Now, with whole life, let me give you an example of price with that, and we're going to use the same age so you could compare. Okay. Very different in cost.
Got you.
Very different in cost, right? Because it's like owning a home. Right. It has equity. It's building. The other one is like renting. Term is like renting.
Okay, term is renting. Whole life is
like
purchasing.
owning a home. Exactly.
Okay.
So a 30-year-old who purchases $1 million in whole life average, we're talking more about $900 a month.
Wow. Okay, so
Completely
it's a difference.
different.
Yeah, from 30 to 900.
But still $1 million death benefit.
That is true.
Okay.
Okay.
So the thing about it is you have $1 million death benefit on the term side and $1 million death benefit on the whole life side. You still have $1 million death benefit. So for all the people who say they can't afford insurance, you don't have to have the $1 million whole life.
Okay.
You can get the $1 million term and get
Exactly.
some whole life.
So
Because think $500K is gonna cost half of that.
Right.
$250 is gonna cost a fourth of that. So you get what you can afford, and you build your whole life portfolio while you have the term covering you.
So why should I get a whole life? What's the purpose?
Well, the purpose of whole life is it builds cash value. That's the
Okay.
one that you own.
Okay.
You own the home. That's the one that you can borrow from.
Okay.
You can't borrow from the term.
Okay. So it's mainly the death benefit when you were talking term.
It's only death benefit.
Yeah,
Okay.
one
It is
term.
only for your beneficiaries. It is not for your use. It has no living
Yeah, that's
benefits.
what she was saying. She was saying it's for the death and the debt as well that you have that you can cover in case you pass in a
So
unforeseen
one thing about
circumstance.
term that I also want to point out to you is a lot of times people are like, well, why do I need term? It doesn't build me any money. You normally cover your car. Because if you get into an accident, you don't want to have to worry about the medical bills, covering the car, all of those things. It's not necessarily money for you because if you don't get into a car accident, nothing happens.
Right.
Right? You don't get a check because you didn't get in a car accident. So with the term, it is replacing your income for if something was to happen. So if you have children, you have kids,
Yes.
right? If something was to happen to you unexpected in a 30-year period, right now while they're young, this is when they're dependent on you.
Right.
Yeah.
This is when they need the money. When they're 60 years old, not that they don't need the money, but they're not dependent on you the same. So you need to make sure you are covering your children in the time frame if you died in a certain time frame.
Yeah.
That's why term makes a lot of sense. People don't think they want to use the term, but it really makes a lot of sense to have it in those cases.
So when I started researching about life insurance,
And
right,
I
I was
gotta tell
reading.
you about IUL after.
Yeah, that's what I'm about to get to. Because I was reading a lot of books like Becoming Your Own Banker by Nelson Nash. What Would the Rockefellers Do? A lot of them was talking wealth and IUL strategies, right? And now I see
Rockefeller do talk about whole life.
he talked about whole life. Yes,
Whole
you're
life
right.
focus because he likes to guarantee.
You're right. But all of a sudden, I started seeing people just market IUL. So what is an IUL?
Okay, so first of all, a lot of reason why people market IUL is because there's companies who they only offer IUL.
What does it stand for?
Index
Okay.
Universal Life.
Okay.
So
Okay.
Index Universal Life is a fixed product. I know people think it's in the market. It is not in the market. It is based on the market.
Okay.
So it's not the market.
So
it's
it's-
based on the index. So whatever index is following, whether it's the S&P Fidelity, the S&P 500
The Dow.
Fidelity, whichever index, depending on the company, is so many different options you can choose from. And so whatever index is following, you get a credit based on what that index is doing. But majority of the company's credit is not the actual index, meaning let's say the index performed at 25%. The credit for that company may be 9.3.
Okay.
That means you would get a credit of 9.3 interest, even though it was really 25%. And people don't know that because it's not the actual index. It's based on it. So the insurance company still determines what percentage you're going to get of it. The thing people like about it, it has a floor of 0. So if the index was doing bad and it went negative, you wouldn't lose money, right? So you wouldn't lose money, but you don't gain anything if it's at 0 either.
Yeah.
Right.
And people don't realize what big of effect that is on your compound interest when it's nothing to compound this year. So in the Index Universal Life policy, your interest ranges each year. It could be, they could credit you 9%, they could credit you 0%, they could credit you 2%. It's a range. So it's up and down and it's unknown. The thing about Index Universal Life is it builds cash value. It has a flexible premium. So how I said whole life has a fixed premium.
Yeah.
It has a flexible premium. There's a range that you can pay from the base to the MEC premium.
Yeah.
You could pay anything in between. But it has something called a target. And if you don't pay the target premium, it's very likely you will outlive your policy if you live a long life. The other thing is, if you don't fund it properly, it can lapse before you're done. You can literally, I just had a client reached out to me. She is about to turn 65. She started paying into IUL at 22. She's been paying the same premium the whole time. Guess what they did? They sent her a letter saying her policy at 65 will be ending.
Wow.
All of these years, she's thinking she has $100K in coverage. But the thing was, she was paying the base premium, which is the minimum.
Yeah.
The minimum will never take you throughout your whole life if you live a long life.
Yeah.
Nobody told her that. So she's thinking, I'm good. I'm paying my premium. I don't need to pay anything else. The issue with IUL is you have to pay the correct premium. And if you don't know what that is, which most clients don't know, it's a good chance the policy can lapse on you. So I prefer IULs, me personally, for people who are planning on overfunding their policy. I think if you're not going to overfund your policy, then you might as well go with the fixed premium and know that your policy is going to last, know how much you're going to pay. Now, that's a preference. I personally say that because I feel like people who are not in insurance are not keeping up with the policy.
Yeah.
Right.
And if you don't keep up with the policy and keep asking them for something called an enforced illustration, which is an illustration telling you exactly how it's performing based on the actual interest and not the estimated illustration you initially got, because that's not actual. Illustrations are estimations.
Okay.
So I can illustrate it at 5%, but maybe your average is 3%.
Yeah.
So what I showed you is not what you're going to get. So therefore, people are basing their life on that illustration. And the illustration adjusts all the time. So in a index universal life policy, it's very important that you fund it properly.
Okay.
And online, you hear about max funding.
Yes.
That's somebody getting the lowest death benefit and maxing out the most amount of money you can put in there with that death benefit without it MECing. And a MEC means that it's a modified endowment contract. That is when the IRS deems that the policy is now an investment and you will then have to pay taxes.
Okay.
Okay, so anything above the cost basis, any of that capital, that you'll pay capital gains tax on it. But MEC is not always a bad thing. There's individuals who are transferring wealth.
Yes.
If you are planning on transferring wealth and you're not going to loan from your policy, you plan on using the life insurance just to be able to pass through a tax-free death benefit, you can MEC the policy because it doesn't affect the death benefit. It's still tax-free. So if you're a person, there's people who use these policies to just dump as much money as they can to get that gain without paying any taxes.
Yeah.
Because if you had it in the market, you would have taxes. If you had it in anything else, it would have taxes on the gain.
Yeah.
So people dump as much as they can, and that's why the insurance company got a limit. Even on their side, they'll limit you.
Right.
They'll be like, oh, you cannot put 20 times the premium in here. Because people try, that's an excellent way for you, if you're wealthy, to dump your millions in and let it get the compound interest.
Yeah, of course.
And pay no taxes.
No taxes
And then
at all.
transfer it to your family tax free. So for people who are doing transfer of wealth and don't need the living benefit, you can MEC the policy.
So I'm going to just say this, right? Everything that you just said, for all you that don't know that she doesn't know life insurance, I'm just let you know right now, she just broke it all down for you. I just let you know right
crazy.
now. She went crazy. She just broke it down to the T. And I think that's important.
Y'all understand term whole life and you well now.
I hope y'all understand.
Term
whole life IUL now.
Right, because she just broke it down all the way for you. So I don't want you guys to hit her up saying, hey, what's an IUL? No. She done broke it down. Go to the Millionaire Essentials podcast. I broke it down.
Just watch this interview.
Just watch it. Just watch this again.
So you broke down a lot of wealth talk just now. I ain't want to stop you. You was breaking down a lot.
I was gonna let you keep going. I was gonna sit back for a second.
So what I want to ask you, right? For somebody, so you kind of explained a term is absolutely affordable, $30 a month. So for somebody that's living below poverty level, at poverty level, they're Section 8, maybe food stamps. How can they start their wealth building journey leveraging life insurance? They could get a term, but should they get a whole life, or should they try to do IUL? Like, how can they start their life insurance journey?
So typically when I'm dealing with somebody who's in a lower income bracket, I'll usually tell them to start off with term and see how they do with it.
Okay.
Because the thing about most individuals who are struggling financially is they lapse on their policy.
Yeah.
Right.
So they buy a policy, it
Can't
don't matter
afford it.
which one they get. They lapse on it.
Right.
You know, and so that's a loss to an individual. The insurance company wins. They don't have to pay a death benefit, and they got your money and invested it. So my suggestion is we look at their disposable income, and that's how I make, and how old they are and what their health is, and then I'll say, well, let's use this small amount. So if within that amount we're able to get some permanent and have term, I'll do both, because I do believe that having the permanent policy build them some money can help them in the future. Right. When they bump into a hardship, they may be able to borrow some money from the policy. So I do want to build something for them. But if they tell me they got 5 kids, a husband, and they got a $50 budget, we doing term, because if something happens to them,
Right.
in the immediate years, that's critical. Let's say that 30-year time frame, they're gonna get way more death benefit. Like, you see how we got the million for $30. If we spent $30 on whole life for a 30-year-old, they would have $25K for that same amount of money. So I'm not gonna give you $25K over $1 million, and you tell me you got a family of 5.
Yeah,
It's not gonna make sense. Mm-hmm. So you also have to think, everybody, it's not their time to build the cash value side.
Got you. Okay.
It's not everybody's time to do that. You have to be able to afford it. Protection first. Life insurance is protecting your assets. Right. So protection is first. The investment side is second. Yep. If you can afford to invest, that's just like when you guys probably talk about investment. Yeah. Investing is not for everybody. If you're not able to pay for your basic needs, you can't invest yet.
It's true.
If you can't afford your roof and you can't afford food, how am I telling you to take some of that money and go put it in the market? That doesn't make sense. Which is why they have risk tolerance whenever you're investing in the market. They ask you how much you make. Yeah. What's your net worth? You have a negative net worth.
What are you doing?
This is not where we should be. Right. Playing in the market.
$50, somebody can spend that. They do that every month on food or something.
Right. Now, if you make a low income and have some disposable income, meaning, maybe you could stop with the Starbucks coffees, and you can take even $20 a month and put it to the side to help build your wealth, I do encourage that. Because how would you get out of that rat race if you don't start to, invest?
Budget, invest.
But if you're in the negative, if you're not able to maintain the bills, then it's not yet your time to do that. And there will be a time for you once you start to create some other ways to make income.
It's great you broke that down, right? Because there's a lot of things people about life insurance they just don't know. You basically broke down, you can get a policy depending on where you're at. You don't have to get $1,000 policy or $100 policy. You could get a $30 policy. So you could base it on their situation and customize a policy depending on where they're at. And I think there's a lot of misinformation. People say, I can't get life insurance, I can't afford it. Because they just don't know that the policy can be customized according to your budget.
And that's the thing. Life insurance is supposed to be customized to the individual. And when you find an agent that's not doing that, that's the wrong agent for you.
And I was just about to say that. I was literally just about to say that, because a lot of these agents, they'll say, yeah, get you a life insurance policy, gives you a life insurance policy, but they won't say, well, if you can't afford even your basic necessities, then you should not be getting a life insurance policy at this moment. Mm-hmm. You should be understanding how to budget so that then you can come time so that you can afford that life insurance policy to then start, providing for your family and then start investing.
Exactly, because what's the point in me starting a policy with you and 6 months later you got to let it go? it didn't do anything for you.
Exactly.
You didn't get the death benefit, and you lost your 6 months of money because the insurance company's not giving that back to you. So it doesn't make sense for people to start when they're in certain points of their life. Also, to speak on, you just mentioned, you just said something and I wanted to.
Some of the life insurance agents thing.
Right, the life insurance agent thing. This is the thing.
Break that down. Let's talk about that.
So with the life insurance
She got a gripe real quick.
with the life insurance agents, you got to understand that they sometimes are just as green as you. They can be a new agent. And they, like I told you about the mentorship part, a lot of them are not being trained properly. So they may not even know about all the types. They know that they exist, but I'm saying they don't understand it. And
they
people
weren't taught.
tend to not sell what they don't understand.
Right, of course.
So they may not sell you what you need because they don't understand it. Or they can be at a company that doesn't offer it. There's a lot of companies that don't offer whole life, don't offer term, don't offer UL. It depends. So if you're dealing with an agent that only works with one company, they may only know that product. And they may not intentionally be doing you a disservice, but they're doing you a disservice because they don't know.
Gotcha.
And I don't like to speak on companies because I don't need no beef with the companies. But, that's just to say, there's this one particular company that only sells term, and they sell the investment side, which is the whole Dave Ramsey thing.
Yeah.
Of buy term, invest the rest. So they push all of their agents for that. That's their mission. Buy term, invest the rest. What about all of the people who, one, are not consistently investing? Two, they would like to have insurance after 30 years.
Right.
And it just not end, and they don't have anything. What happens to all of those people? So we don't sell them anything because you don't offer it? It doesn't make sense. At least teach the agents to say, well, we don't offer it, but if this is what you're looking for, I can refer you to somebody. Don't teach them to tell people like you just don't need it.
Yeah, that don't make no sense.
It don't make no sense.
She's basically saying that all y'all life insurance agents need to tap in with her and be mentored by her, because she's at least giving you the breakdown of not only just the IUL, right? She's giving you the breakdown of the whole life. She's giving you the breakdown of the term, but who to sell it to, why to sell it, and how.
Right, because every policy has its own purpose. So when an ideal conversation that I'll have with a client is, tell me where you are, where you want to be, and what's your financial goals now as opposed to in the future. Where would you like to be?
Yeah.
And where are you now? And let's just discuss what your income is, what your budget is, what your expenses are. Because sometimes people tell me a budget and I'm like, that doesn't make sense. You just told me what your expenses are, and you just told me what your like. I've had somebody who told me they want to spend $25,000 a year and they make $100K, and I was like,
how is that possible?
25%. It's 25%.
I said,
not only
you
they
don't pay
taxes. I was about to say,
like, I'm like, that's a lot of money to spend for that income. It is. It's a lot of money, and I was like, you have to explain to me how this makes sense.
After taxes in New York, that's like 65, 70.
So then he explained that he works a job that they pay all his expenses. So he's not paying like living expenses, car, this, that, and the third. But I said to him, life insurance is a long-term vehicle.
Right.
So you may have this job now. Will you have it in 5 years?
See, and that's...
Or 10 years?
That's
because
amazing.
You know how many people come to me and say, somebody set me up with this policy when I was younger, and I'm no longer in that financial space. I could say, maybe before you had kids, maybe I could have set you up with something for $2,000 a month, and you might have been like, yeah, so what? You got a whole family. You like, wait a second, we need to slow this down.
Yeah. Right.
So you have to make people think. You got to make people think. I asked them, are you planning on having kids? Do you want to get married? Because I need to know, what does that look like for you? Are you guys going to purchase a home? What are you going to do? Because we need to think about, I'd rather you build on the insurance over time than for you to go really big, because right this second you're doing good, and maybe you're not doing as good in 5 years.
Yeah, that's the truth.
It's important, and it's great that you said that, right? So you're really breaking down a strategy for everybody that can really help them. And you're a broker, right? Mm-hmm. So you don't do this for free. You obviously get paid. So let's talk about the business side of life insurance, right?
Okay.
Because now I see what a lot of people are doing, exactly what you've been doing for the last 14, 15 years. A lot of people are now going to brokering instead of working for individual companies who only pushing certain products. So now there's a lot of agents out there, they're not as eloquent as you, that really break down the person, the family, the individual, and get them the right policy. A lot of agents are pushing policies maybe to get paid. So can you break down the business side of life insurance for somebody that says, I want to get in life insurance and I want to become rich doing this?
So there's so many ways to make money in this business. But let's just talk about on the life side.
Okay.
So being a life insurance agent.
So the life side, you're not even talking about the death side.
No, I mean that.
Yeah, she kind of.
No, the life side meaning like the life insurance side as opposed to health insurance side.
Yeah, yes,
as
life
opposed
insurance.
to disability,
Yes.
right?
Gotcha.
Because as a life insurance agent, you have your health license most of the time, and you can sell all of these things.
Oh, I didn't know that.
Yeah.
So you can sell
I didn't know
disability,
that.
you can sell health insurance.
Health
Okay.
insurance, I could do group plans.
Oh, wow.
Everything.
Okay.
I could sell to a whole company, to a corporation.
Wow.
Everything. So long-term care. So it's so many parts to it that people don't realize. So you really can get in the business and decide what kind of agent you want to be. Some
Gotcha.
people only focus on group. Some people only focus on health, right? It depends. Some people only focus on life. I have my securities license.
So you can sell annuities and things like that
All of
too.
that,
Okay.
right? But I let the license go because being online is a problem for FINRA.
Gotcha. FINRA, yeah.
You got to be real careful with your, having a securities license and being online because they look at it as soliciting. So that's a problem. So I didn't want none of the fines that they were trying to give, and I let that go.
That's going to be a whole nother topic for y'all on FINRA, because FINRA,
They don't play.
They don't
play.
They don't
FINRA
play
does
no
not play.
games. They don't play no games. And so, all right. So being an agent, the thing is you're on commission.
Right.
So if you are an independent agent, it's two different types of agents. You could be captive or you could be independent. Captive means you're with one company. You're kind of like an employee.
yeah, the
Like
name
a
the
New
name
York
says it all.
Life.
Yeah,
the name says it all. Right there.
So like a New York Life, a Northwestern Mutual, or some of the biggest
Mutual fund, stuff like that?
capital.
Okay.
Captive companies.
Gotcha.
They give you health insurance, pension, all of these different things, right? But you have to abide by their rules, and pretty much you're selling their products only. They do have some options that later on you can sell certain products outside, but you have to abide by what products they allow you to sell. Gotcha. When you're independent, you can sell any carrier, you can sign up with any company, and you can negotiate your own commissions.
Okay.
So obviously, if you're a high producer, you can get higher commissions.
Yeah.
And you can get all the way up to 120, 140% of the annual premium. So, but the thing is that you are your own boss. You have to go out and find your own clients. So you eat what you kill.
What you kill.
Right?
Yeah.
And so in those scenarios, if you're not good at that, then you can have no money.
Right.
Now, you also make residuals. So once somebody purchases a policy from you, there will be a residual that you would get. As long as they keep that policy, you can get paid every year. Now, as independent, the residuals are less than when you're captive.
Okay.
The captive percentages are higher, but guess what? In the captive, when you leave the captive company,
It's over.
you leave all of that behind. You start from scratch. And
It's captive. I mean, they capturing it.
They keeping it.
They ain't
So
playing.
in the independent world, you keep your stuff. Even if you're selling other companies, you're keeping.
As long as your life insurance
License.
license is still active, then you get to keep that residual
You
that
keep
keeps coming
getting
in.
your money.
Okay.
And you can sell nationwide, or how does that
Yes.
work? Okay.
So there's so many different companies, and so you have to purchase the license from state to state. So if you want to sell in a state, you got to purchase that license. And then also there's some other things that we need to pay for, like E&O insurance, which is just to protect you if somebody sued you. They have your back and you
Yeah.
know pay the claim.
How much is for a life insurance license, if you don't mind me asking?
So usually each state is different,
Okay.
but New York, I think it was like $50 to take the test.
Oh,
It's
okay.
very affordable.
Okay.
So depending on how you want to study, you Kaplan has study in, Reg Ed has study in. You could study wherever you want, get the books. You could do classes if you want to. Some companies will offer classes for you. But long story short, it's a commission-based business. Okay. You decide to make your business the way you want to make your business. Right. If you're going to target high net worth clients and therefore the annual premiums are much higher, then you're going to make much more. Or if you're doing a lot of clients, even if they're not paying a lot, but you're doing a lot, you can then also have the residuals. You can have large commissions. So you really decide who you want as your business. Like if you guys wanted to be agents and you target businesses from what you guys do already, then you would target business owners, and usually business owners you'll get bigger premiums from. Oh, wow. Because you could do key man insurance, buy-sell agreements, executive bonus, all of those different type of things for them. And you would probably make way higher premiums.
So Millionaire Essentials Life Insurance Program is coming very soon. The agency will be opening up by the end of 2024. Yes.
With the help of Ms. Smith.
With the help of Lindsay Smith. But so you were talking about the E&O insurance and things like that that can cover the life insurance agent. Mm-hmm. What else do they, what else can they be making money off of from that life insurance?
So that we don't make money off of the E&O.
No, I know that's to cover the agent, but what else can they make money off of?
Okay, so the agent makes money from the annual premium of the life insurance policies that you sell. Okay. This is why people say that people who push, like agents who push whole life are a scam because they say the commission is higher. But the commission is only high because the premiums are more. Right. You see obviously. How we talked about
dealing with a high clientele and all of that.
Yeah, so you're gonna make more money.
It's a purchase versus a rental. Right. So even
you remember
think
that.
About it. Yeah. Because the real estate agent will always make more on the purchase of a house than they would on a rental because you only make a small fee. Yeah. Mm-hmm. So I mean, it goes hand in hand in the sense.
Yeah. It does. I mean, if whatever you're selling, you're gonna get a percentage of that. That's what you're gonna get. So for instance, let's do an example. Let's say somebody spends $10,000 in premium. That means annually it costs $10,000 for their policy. That means the agent, if it is a term policy, they would...
A term?
Yeah.
Okay.
Right? Let's just say it was a term policy. If it was a term policy, they would have got maybe 120% on that. So they would have made, what, $12,000? Wow. The commission would have been $12,000. So, but if it was a whole life...
Yeah, we started building...
I already told y'all, right?
Yeah.
By the end of 2024, don't worry about it. Gotcha.
But a whole life, the commission is lower. So a lot of companies' commission for whole life is 55%, but you get like overrides. So you could have like a 50% override, right? So that means if it was 10,000, you got 55% of that, which meant 5,500, and then you got 50%
on an override.
On top of that. So then you got another, $2,750. So in total, your commission was, 6, 7, 8, almost 9,000.
Wow.
So, and then on that, you would get a residual every year, like 5%
well,
or 10%.
I'm telling you.
So being that you just broke those numbers down, right? Is this something that somebody coming out of high school, would you encourage them, or college, would you encourage them to get into life insurance?
Absolutely. It's an amazing business, but I'm going to say this. I only think that people should seek being an agent if they are good with people, they are good at sales, because even though it's a purposeful job, you have to be relatable to people for somebody to want to choose you as the agent over me. You understand?
And especially in the neighborhoods that you go into. That's also important.
Or just networking. I mean, these days you could be a digital agent. Literally, you could be online, putting videos up, going to networking events, going to virtual events, and get clients like that. It's not even, when running I got ads. Into the business, you had to physically be in front of people's face. Right. You don't have to do that anymore. My appointments are all over the phone. I don't do in-person appointments. That's amazing. So I think that it's definitely, if somebody has a hustler spirit, they can do really well in this business, really well. I mean, think about it. On a daily, even if you did somebody, let's say an average person that spends $100 a month, that's $1,200 a year. If that was term, you would be getting, $1,500 commission for one person. That's one person. That appointment may take you 45 minutes to an hour. So if you decided you wanted to do 4 people a day, and that's a low premium, but that's if you're dealing with an average individual.
Yeah.
A lot of people are spending $500 a month. A lot of people are spending $1,000 a month. But again, that's the clientele I'm targeting.
Got you.
But you cannot be targeting who I'm targeting. You could be targeting somebody spending $50 a month. It still will add up. Maybe you would do 4 appointments in a day.
We gotta talk. Cause it's way too much money that's coming out of this. I'm being honest.
It's an amazing. Why do you think they say that in the financial industry that life insurance agents are the number 1 millionaires? Because people don't know that. Like when you're passing that down and you're giving your family members those clients, like they're already in the business making money out the gate.
Oh, so the residuals can transfer?
You could put it, you can pass it on. So
a lot of billionaires own insurance companies.
A lot of them. Because all right, I'm going to give you the play. So
okay. All right.
Give us this play. Hold on.
I'm going to give you the play.
It's All-Star Weekend.
I'm going to give you the play. So I'm going to give you this. So let's say you own a life insurance agency.
Uh-huh.
And let's just say you have 1,000 agents.
Okay.
That are mediocre. Nobody does great. I'm talking about people making $50K a year.
Okay.
$50K. Now, most life insurance agents that do well do at least $250 to $750 if they do well. The agents that are not doing well are the people who are like at 100,000, 50K.
That's not doing well.
That's not doing well?
No, because that's a very no. Let me not say that's not doing well.
I could be an average agent.
Let me change and not say that it's not doing well. That's a very average agent. You only gotta do $300 a week to make $102,000 a year at a 60% commission. $300 a week, meaning that somebody spent $300 a month. So you could have either had 3 people at $100 a month. You could have had 6 people at $50 a month. If you do $300 a month, $300 a week, that's $102,000 at a 60% commission. Remember, what did I just tell you? The term commissions are pretty much 100% if you're a broker.
Yeah.
Even if you're a new agent, you don't have really good numbers yet, you'll still get about 90%. And then even let's do it on a newer agent. A newer agent still, let's just say they're getting a 55% on whole life. Let's say they're not getting a bonus yet. Even at 55% and at the 90%, you average that. The average is still higher than 60%. But at 60%, you only need $300 in check a week. Now, granted, in the life insurance business, some people policies fall off. And they take that commission back.
Oh, so they take it back.
If they don't stay on for a year, they will take that commission back.
So hold on, you just open up a whole can of the world. That sounds a little different.
I don't know about 2024, y'all. It might be 2025.
No. So this is the thing. If you sell people what they can afford, you're not gonna have a lot of people falling off.
And that's when what you just broke down. That's when coming into play of breaking down, like you just said, selling people what they need and not what you think they want.
Right. Sell them what they can afford. Sometimes what they need, they can't afford.
Oh, what they need, they can't afford. Okay.
So you're going to give them what they can afford. Something is better than nothing. Okay. Something is always better than nothing. You may need $1 million because 10 times, ideally it's 10 times your income.
Right.
So if you make $100K, that's $1 million. So you may need $1 million, but your bank account may say no.
Right.
But if you got $500K and passed away, is your family gonna say, "Oh my God, I hate you. You left me $500 instead of $1 million"?
No, they're not.
They're not.
They're not.
They're not gonna say.
They're not gonna say that at all.
They're gonna be so happy that they're not paying for your burial.
Exactly. Not only that, but the bills that's to come from the creditors that are gonna try to come on.
Did you have to learn that over time? Did that hit you a couple times? You can answer.
But that's what a mentor is for. The mentor is somebody that has gone through these experiences before, that can teach you not to go through those same experiences that they have. She could have, lost like 50 clients in 1 year just because, she didn't know what she was doing.
I'll be honest with you, in the beginning, I really didn't lose my rate, like they do the ratio for you. I was
Yeah.
like at 99.6%.
Like, you the top of the top.
My people was not falling off because I was on them. I knew that was the case. If you know that going into it, you're gonna be like, let me make sure these people not falling off.
Right.
If somebody said their budget was 200, I'd be like, let's start at 1. Let's start at 100 and see how you do for a year. Because I don't want people to fall off. I still don't want people to fall off.
Right.
You can't always afford it. Some people, different things happen.
Life be lifing.
Yeah.
Yeah, but you want to keep that percent really, really small.
Right.
But let me just finish telling y'all to play real quick.
Yeah, my fault.
Real quick.
No, you
so
right.
if you run a life insurance agency,
Right.
Okay.
let's say
1,000 agents.
Let's do 100 agents.
100 agents. Okay.
100 agents at 50,000. How much is 50,000 times 100?
Add 2 more zeros. 500.
500,000.
Right. So 500,000. You would get 30% of that. What's 30% of that?
30% of 500,000. Hold up. 5150.
15.
150,000.
15.
150,000. So you would make 150,000 without doing anything.
Huh?
Because the agents are making.
So you have the agents under you making the money.
This is what I'm saying. So you don't necessarily have to do it. Now take it up to another level. That was just 100 agents, right? There's agencies out here that got 10,000 agents, 20,000 agents. You ask me why they making money. They got 20,000 agents. And remember, I'm saying a low, super low number. I'm telling you 50,000. There's agents doing 200,000. There's agents doing $1 million. There's agents doing $7 million.
And learning from somebody like you gonna have agents performing.
And that's the whole purpose. So having the mentorship back it up at the same time, that's how you can really maximize on the number. So maybe you don't need to have 500 agents. Maybe you have 100 solid agents doing $500K a piece.
So yeah, this year the Millionaire Essentials Insurance agency is getting set up.
Don't worry, we got y'all.
So what you just broke down, right? You told me before you came, you got something special coming up. You breaking down insurance, you're breaking down trust, and you breaking down taxes.
Yes.
So that's the ultimate wealth trifecta. Can you break down what you have coming up and how you combining all three?
So me and Miss Business.
Okay.
My girl.
Hopefully we can have her on here next. Yes.
So we are actually doing something. I know if you guys might have seen it, the Guardians of Wealth.
Oh wow! I didn't know.
The Guardians of Wealth.
I didn't see the name. I didn't see the name. I always saw them to come. Okay, that's nice.
Okay, we're like in a superhero type of deal.
Okay.
But we're doing a webinar actually this Thursday, and next Thursday is our last 2 webinars we're doing. But we're doing webinars this week. It's going to be trust, insurance, taxes. We're putting everything together so that people don't have to go over here for insurance, over there for trust, over there for taxes. So we're going to explain everything all in one shot deal. The webinar is free.
A free webinar. Free.
It's free. You
wealth talk.
People act like they too fly for free.
Right.
But don't worry, we got an offer for you in there.
Okay. Hey.
We got an offer for you in there. But it's a free webinar, and you guys can get all the gems. So all you got to do is pull up.
Hey, pull up. It's a free webinar. Look, if y'all want to spend some money, it's going to be offered. I ain't got to worry about it. But it's free. So, even for the people that don't understand what she's talking about sometimes in some of her Instagram posts, and you're like, yo, I don't know what she's saying, but it seems like it can help my family later on down the future. I think that free webinar is something that you need to attend. Because not only just for yourself, but for your legacy, for your family, even for your little babies that you have now, you can understand what policies to get them so that at 17, like your daughter, or 18, that they can now have something that's paid off and they can start to use to invest inside of them.
Shoot, after this, they better know what's going on. She done broke down everything there is to be.
You know what's going to happen. They're going to watch the whole thing and then they still going to hit her up, say, hey, what's the IUL?
Oh, yeah, that's how they do.
And that's when you got to rewatch the episode at that point and get our views up.
She got the wealth trifecta, Miss Business. She's talking taxes, she's talking trust, and they're talking life insurance. No matter where you're at, they can customize it.
Storm on there doing the
they got Storm on there too.
Storm doing the trust.
Okay, got you. That's nice. So it's trust, and I know he does a lot of real estate.
He's talking about real estate, so
it's the perfect trifecta. Well, Quadfecta, whatever.
Trifecta.
No, but
Trifecta.
but it's real estate too.
He's doing
real estate is there.
He always got to try to add some extra in it.
I mean, they getting it for free on a webinar. I mean, you might as well add the fourth thing at that point.
But yeah, definitely appreciate you, Lindsay, for coming by, stopping by here, breaking down a lot of great information that people needed to know. Let them know where to find you, how they could check you out.
So you can check me out on all platforms at Lindsay Smith the Agent, and Lindsay is with the A because some people got it with an E.
Okay, it's all right. Her mother knew how to spell. Like, she didn't know how to spell before the bachelor's and the master's and everything. It's cool though. She got it.
Doctorate,
everything. It's cool. That's what happened. She ain't know how to spell that at that point, and then she just had to go get the degrees to let them know what's up.
Anyway,
that's what it was.
No, Lindsay with the A is for girls, and E is supposed to be for a boy. Did you know that?
I thought E was supposed to be for like the white people.
No, E is supposed to be for a boy.
I'm gonna be honest. I thought Lindsay was always for a girl. It was never supposed to be for a guy.
No, there's a Lindsay spelled with the E is for a boy.
Let them know which one you are, though.
Yeah.
I'm A, right? Okay. Lindsay with the A. Okay, and so also my website is lindsaysmiththeagent.com, and I already told you about my social media, and that's it.
Okay.
Appreciate you. Well, this is the Millionaire Essentials podcast, where we give you all the essentials to become a millionaire. This is Lindsay Smith, y'all.
Yes, peace.